Hi everyone, this is Hector again. Welcome to a new video of my Forex trading course. In this video I'm going to be talking about ranges and range breakouts, okay? Those breakouts that perhaps, probably, or hopefully we can profit from and, make some pips of it, okay? First of all, let's begin explaining what a range is. If you've watched the previous video regarding triangles, this is going to be pretty straightforward because, most of the trading principles that we saw on the triangle breakout video will apply on this one. Okay, it's basically the same nature as far as the pattern goes. It's basically a congestion area, all right? Basically, when you have an uptrend, sometimes, the bulls and the bears need to, need to settle down, need to take a breather in order to, gather up momentum enough for a new thrust in the direction of the main trend. As you can see, it's basically the same principle as the same theory as we saw on the triangles. It's just that the range, as opposed to the triangle, which was basically two trend lines, opposite trend lines, meant to clash onto each other at the vortex. The ranges are basically two sideways horizontal lines, entrapping price as price bounces within that those two horizontal lines, perhaps making a double or a triple top of the range top, and a double triple bottom of the range bottom. In this case, we have a double bottom, okay, right there, and a double top. Okay, it's a small range, as you can see. It's not very large. It's barely made up by, let's say, 15-20 bars. 20 bars at most. It's small range. Later on I will show you another chart with very large range. Larger than usual, but this one, in this case, this is the type of range most of the times you find. Okay, it's a range made, like I say, out of 20 bars, something like that, and it's very easy to spot within the trend, because, like I say, there are two or more bottoms, okay, effectively forming the range bottom, and then two or more tops, effectively forming the range top. Okay, basically, as we explained on the triangle chapter. On the triangles chapter, basically what I said, once I spot a range, this range bound price action, what I do, I usually place my sound alarm a few pips above the range top. In this case, since we are in an uptrend, remember that I only take breakouts in the direction of the main trend. So should this breakout happen to the downside, I would cancel the whole thing. Okay, I will not be looking for any more trading opportunities in this setup. Okay, only if it breaks to the upside, I would be interested to search for long entries, and long entries only. Alright, so like I say, what I usually do is to place a sound alarm few pips above the triangle top. As soon as it gives way, the alarm goes off, and I focus my attention on the chart. Please remember that, as opposed to the triangle, where you had let's say a reference as far as time goes, which is the vortex, that the triangle is supposed to break before reaching the vortex. All right, well, ranges are, since ranges are basically made up by two horizontal lines, there is no vortex, so this range can effectively go on for, God knows how long. You don't know. That's why you want to use some sound alarms in order to be, in order to know when the breakout actually takes place. As I was saying, you don't have that time reference, meaning the vortex, so this range could go on and on for many days, and you can't possibly follow a chart for that long time. So it's always good to be to be alarmed whenever the breakout happens. Okay, as usual, in small ranges like this, the signal comes in the shorter time frames, what I usually call the trigger charts, which, as you know, is usually a 4 times smaller time frame than the setup chart. Okay, the setup chart in this case is the 1 hour time frame. The setup chart is the setup where we spot the actual trend and also the range in itself. So in order to search for an entry, I would zoom into the 15-minute chart. Okay, since the 15-minute chart is basically 4 times smaller or shorter than the hourly chart. Okay, all right, now zooming into the 15-minute chart, let me scroll back to spot the range. There we have it. As usual, as I explained on the triangles video, I look for my typical breakout pullback continuation pattern. Okay. Usually in small ranges, as I was saying, you see the breakout pullback continuation in the short time frames. In longer charts, in longer ranges, sorry, the breakout pullback continuation pattern takes a little bit longer to unfold and therefore to represent itself on the charts. So you might be able to spot it on the setup chart in itself. You don't need to zoom into the trigger chart, but in this case, since it's a small range, you usually need to zoom in a little bit in order to spot the actual signal. Okay, the actual entry signal. But no worries, I will be showing you more charts and you will be able to identify or to visualize what I'm talking about. Okay, in this case, I was saying we have a very, very small range, and therefore it's always useful to zoom into the shorter time frames, into the trigger chart. And well, basically this is the case. Okay, first of all, we can see that we have the breakout bar. All right, you see this is the level we were keeping an eye on. Our sound alarm was placed few pips above. The breakout thrust takes place. Our sound alarm goes off. We focus our attention on this chart in order to spot for an entry. As usual, we don't enter it. If you are conservative, if you want to be aggressive with your entries, by any means, go ahead and enter the market just as the breakout takes place. Perhaps, let's say, 5-10 pips above the range top. Let's say somewhere around there. That's not the way I personally do things. Okay, I like to wait for confirmations. The confirmations comes in the shape of a red bar. Okay, that signifies or represents the pullback aspect of the breakout pullback continuation pattern. It's a red bar in this case, since, well, obviously we are in an uptrend, and the pullback can only be signified by a red bar. You want to see a red bar, okay? 1, 2, 3 bars. You do want to see an actual red bar signifying the pullback. Sometimes the breakout takes place, and the breakout pullback continuation might happen on even shorter time frames. I don't like to zoom in too much. Okay, I don't like to go to zoom in farther than, like I was saying, 4 times shorter the time frame of the setup chart. As I was saying, in this example, the setup chart is the hourly chart. Therefore, I would not like to zoom any farther than the 15-minute chart in order to see that breakout pullback continuation. If the breakout pullback continuation shows in the 15-minute chart, great, I'm good to go to search for an entry. If it doesn't, if I need to zoom into the 5-minute chart or even less than that, I'm just not comfortable. I'm just not comfortable with that. To be honest, whatever happens on let's assume our setup chart is the daily chart. All right, just for the sake of discussion here, let's assume we are spotting a setup on the daily chart, and then we want to zoom in a little bit in order to search for our entry. If we need to search if we need to zoom into the 1 hour time frame, the 30 minutes chart, the 15-minute chart, that's too much in my opinion. Honestly, whatever happens on the 15-minute chart or the 30-minute chart is not quite relevant to the daily chart. Okay, it's just zooming too much. We would be probably fooled or confused by random market noise, and quite frankly, the 15-minute chart or the 30-minute chart, it's simply random market noise as far as the daily chart goes. So if I am spotting a setup on the daily chart, I would not zoom in any farther than the 4-hour time frame in order to search for my entry. Anyway, in this case, like I say, I like to see the breakout pullback continuation pattern on my trigger chart, which is the 15-minute chart in this case. We can clearly see that here with the breakout pullback signified by that red bar and then the continuation pattern. As we take out the breakout thrust, okay, this thrust I'm talking about, as we take out that a couple of pips above, 1-2 pips above, we are good to go to enter long in the market, okay. And well, as you can see, it would have run into profits straight away. All right. As far as stop losses goes, as usual, whenever I'm trading a breakout pullback continuation type of entry, I like to place my my stop loss order below the low of the pullback aspect. Okay, so if we have the breakout pullback continuation, this would be my long entry, and right below 2, 3, 4 pips below the pullback aspect, that would be my stop loss. I know some people arguing that well, since you're basically trading a range, okay, you would want to place your stop loss below the few pips below the range bottom, or some people even draw a mid band in the range, okay, and place the stop loss below the mid band, the lower end of the range. Quite frankly, in my opinion, I disagree with that. I like to keep my stop losses as tight as possible whenever it's possible. Sometimes you just cannot keep a tight stop loss, but whenever it's possible, I don't see the need in stretching out my stop losses more than it's actually necessary. In my opinion, I am not here, in this case, I am not trading the range. Alright, if I was trading the range, it would make sense that my stop loss would be placed below the range bottom. But in my opinion, I am not quite trading the range, but actually the breakout of the range. Alright, so if I am trading the breakout of the range, I want to base my stop loss, like I say, based on that breakout in itself, meaning the breakout pullback continuation pattern. The lowest part of the breakout pullback continuation pattern is, of course, the pullback aspect, and therefore my stop loss should be placed a few pips above, below that. If upon entry, right there, price decides to turn around and go back into the range, in my opinion, that breakout has fizzled. Okay, yes, I understand that we are trading in the direction of the main trend, and chances are that sooner or later price will begin moving up again. All right. But in my opinion, there is no point in eating up a large drawdown if it's not necessary. So like I say, if upon entry price decides to retrace back into the range area, I'd rather exit out at a small loss. Okay, remember my stop loss was placed down there. I would take this loss, which is, it's quite a reasonable loss. It's quite small, considering I am aiming for a long swing to the upside. So I'd rather take this small loss, let price reassess itself, okay, let price readjust, let the dust settle a little bit, and whenever it decides to break out again, then I would search for another entry. If the first breakout, like I say, fizzled out, I just don't see the point in being being in that trade anymore. In my opinion, as I was saying before, I'm not trading the range in itself. I'm trading the breakout of the range. If the breakout in itself fizzles out, take up the loss. Okay, eat it up. Tip your hat to the market, acknowledge the loss, and let price reassess itself. Okay, at the end of the day, if we go back into the 1 hour time frame, you can see that we are clearly trading in. Actually, let me scroll. Trading in the direction of the main trend. So chances are that sooner or later we might get another breakout farther on in time. All right, until this range. Until this range bottom gives way, the trend is still intact. Okay, perhaps the first breakout fizzled out, and perhaps price decides to get back into the consolidation area. But until this level gives way, at least from a technical point of view, the trend is still valid. Okay, until this happens and price continues being above this level, we might easily get another breakout to the upside, and therefore another chance to ride a long entry. Okay. It's like I said, it's just a matter of preference. I am not saying it's the only way to place the stop losses. It's not. I'm not saying it's the only way to trade the range breakout. But at the end of the day, this is the way I personally do things. Okay, and therefore it's the way I advise you guys to do it. As a general rule of the thumb, I like to keep my stop losses as tight as possible. If the event that got me in the trade, meaning the breakout pullback continuation, has been violated, I just see no reason to sit through this trade. If price goes back down here, this was your entry level. Right now, price, let's assume current market prices around here. Right now, the loss, okay, the drawdown is not that small anymore, and once, like I say, price has gone back into the consolidation area, there is no reason to be long anymore, because, well, you are still consolidating sideways, and in my opinion, you don't want to be positioned in sideways moving markets. Okay, you only want to be positioned once the market is showing you momentum to the upside. In this case, upside, since we are in an uptrend, of course. If that momentum to the upside, just poofs out, well, it's time to get out. Like I was saying, tip your hat to the market, and take the loss, and wait for another chance to make a profit. Okay, but anyway, if everything works the way it's supposed to, this would be entry level, this would be your stop loss. Okay, this would be the long entry stop loss. Also, another general rule of the thumb: price usually dries out of momentum once the range width has been run. Okay, if the range is, let's say, 50 pip wide, up on the breakout level, you add up another 50 pip around this area, the market should run out of steam. That's what the theory says. Okay, if you are in a very nicely trending market, this definitely could potentially keep on moving forth for much more than those 50 pips. All I'm saying is that perhaps it might be a good idea to move your stop to break even at this level. Okay, once the range has moved. Once the range has moved its full potential width, okay, meaning the full potential target, it would be a good idea perhaps to move your stop loss to break even around here, or perhaps take half of your position out at that level, because sometimes it is to be expected to see a pullback, or at least a minor pullback from that level. Okay. All the people that have been waiting for this breakout to take place, once it does, they run in momentum up to that level, up to those 50 pips, and from that, some of the people, the conservative people, will be conservative traders, will be perhaps closing down their positions, and therefore price could see a retracement. Like I say, if you are in a very strong trend, let's go back into the 1 hour time frame. As you can see, this is, well, it's been a beautiful uptrend all the time up to the range. Once the range gives way, it definitely moves in momentum for quite more than the range width, because like I said, we were in a high momentum trend. But nonetheless, like I say, always expect a little bit of a pullback once you the overall width of the range has been run in the direction of the breakout. Okay, just a tip that you might want to keep in mind: to move your stop to break even at that level, perhaps take half of your position out at that level, letting the second half run, hoping for a larger move, but nonetheless always keep in mind that level. Okay, at least from make a mental note that you might see a pullback, a retracement, or a dry out in momentum once you run the width of the range. Okay, all right. Before I was telling you that this is a rather small range. Now I'm going to show you another chart where we can see a much larger range. I'm showing you right now the USD against the JPY, the Japanese yen chart. As you can see, this is a much larger range. Okay, this one, if before we were saying that a small range perhaps should be made out of, I don't know, let's say 20, 25 bars, perhaps, yeah, 15, 20, 25 bars. A large range will probably be made out of 50, 40, 50, 60 bars even. Okay, that's a pretty large range. As you can see, the move came from above, but then we've seen a long period of sideways price action. Okay, price entrapping. The range entrapping price within, effectively forming a double bottom and a triple top there. Okay, for a long time, perhaps easily 50, 60 bars from all the way from the beginning of the range until the end. It is clearly a long, a very large long range. Okay, in these cases, when you see a large range, there is no need to zoom in for the breakout pullback continuation. You can usually see it in the setup chart in itself. Okay, this is the 4 hours time frame. In these cases, when you see such a large range, such a long area of consolidation, the breakout pullback continuation entry takes a little bit longer to unfold, because at the end of the day, it's been a long range, so it just makes sense that the entry of that breakout will also take a little bit longer time to unfold. Okay, in that case, you usually, like I said, don't need to zoom into the 1 hour time frame, and indeed in this case we can clearly see the breakout pullback continuation signified, represented in the 4 hours time in itself. Okay, no need to zoom into the 1 hour time frame. It's don't you worry, guys, too much about counting how many bars the range got. Okay, whether this is a 60, 50 bar range or a 20 bar range, don't you worry about that. As soon as you train your eyes a little bit, as soon as you do your homework, scrolling back in time in your own charts, trying to spot ranges, etc., you will train your eyes, and you will very quickly identify whether you are talking about a long range, a long-term range, or a short-term range. All right. Like I say, don't you worry too much. It's just a matter of getting accustomed to the charts, of getting accustomed to chart reading, and that only comes with experience. I can only tell you the basics of it, but then of course you guys need to put a little bit of screen time in order to, like I say, to train your eyes. All right, but like I was saying, as a general rule, okay, longer ranges, as in this case, you don't need to zoom into the short time frames in order to spot for the breakout pullback continuation. In shorter ranges, you definitely want to zoom in a little bit. Okay, just a general rule of the thumb, like I say. Also, another thing that I wanted to comment is that don't be too strict about the actual level of the actual bands of the ranges. Okay, as I always say, markets are not perfect. Sometimes here, as you can see, this swing fell shy few pips off the range stop. Here it overshot a little bit, 5-10 pips perhaps. It overshot a little bit. Here as well, and then we had the breakout pullback. The pullback overshot a little bit as well, another 5-10 pips. Don't be too strict about it, okay? It's impossible to expect levels of support and resistance to hold price right to the pip. Okay, it's just impossible. So if you see price here overshooting a little bit, or here perhaps falling shy a few pips, or here once again overshooting the former support levels, now working as resistance. If you see a wick of the a candle wick here, don't be surprised. It's normal. All right. That doesn't mean that the breakout it's about to fail, or that it's a weak breakout. No worries about that. Markets are not perfect. Like I said, it's impossible to expect levels of support and resistance to hold price right to the pip. All right. Also, another important thing to always remember is that the longer the range is, okay, in this case, as I was mentioning before, this is a quite large range. The larger the range is, the more momentum or the more violent the subsequent move up on the breakout will be. Okay. Well, this is something that you begin to perceive as you gain experience in trading, and this is something that I have noticed, like I say, throughout the years. If you go through a very long period of, it's like if the market was dormant, like if it was sleeping or waiting for the breakout to take place. Once the breakout takes place, it's like if many traders, like if many market participants become aware of the fact that this long range has broken, and the excitement of this event in itself spurs the traders to, or propel the traders to enter short in this market. At the end of the day, all the people that have been keeping an eye on the Japanese yen, they've been seeing this range for a long time. Okay, they've been waiting, price swinging up and down, very boring price action, until eventually, whoa, we get a breakout. Okay, you gotta understand that trading the markets, it's nothing but a bunch of people coming together in order to exchange positions. Okay, so like in any other activity that involves human beings, obviously psychological reasons are usually behind trading decisions. Okay, in this case, the fact that we've just broken a long period of consolidation. Once the breakout takes place, it's many people will see green lights, okay? They will, many sound alarms have been ringing off at this level as price was breaking through the channel bottom, okay? And then many people, just as yourself, okay, will be waiting for the right time to enter short in this market, okay? It's been a long period of basically no trading action for most of the traders. Once the breakout takes place, they all get ready to jump on board, okay? And as they do, well, have a look at what happened. An enormous drop here, a very, very large drop, and very fast. Okay, this is something that I've been noticing throughout the years. Like I say, if you spot a large range, keep an eye on that range, especially, well, not on the range in itself, but on the breakout, because once the breakout takes place, you know, market is bound to react very very violently of that event. Okay. Now I want to show you another interesting chart, where you will see that sometimes you might miss the first chance of entering the market, okay? Meaning the initial breakout pullback continuation pattern, but that doesn't mean that well, the boat has taken off without you. You may have a second chance later on in time, okay? I'm going to show you a chart on the GBP against the Canadian dollar. And well, we can clearly see I've marked this sideways range in blue in my screen. Okay, we have a double, as usual, a double top. Sorry, in this case we have a triple bottom right there. Effectively building the range, and this is the breakout that I was or I would be looking to trade, okay? In that case, if I zoom into my trigger chart, since this is the hourly chart, I would zoom into the 15 minutes time frame in order to search for an entry. Let me scroll forward a little bit. Okay, there we are. This is a breakout, as you can see, and it's run, well, it's run about 100 pips, okay? Straight through, no breakout pullback continuation whatsoever, okay? Have a look. We have a nice move straight through, okay? If we were waiting for a breakout to pullback continuation pattern here, well, we definitely didn't get it. Price basically, like I say, moved 90 pips to be exact in one direction straight through without giving us any possible entry. Okay, when that happens, please don't just ditch the chart as a whole. Just keep it open, because you might have a second chance. Okay. Sometimes, you know, quite often actually. Remember, what I was saying before. Usually, when price reaches the total width when price has run the total width of the range, okay, usually we see a momentum die out, okay? Some positions are being cashed in. All the people that entered upon the first breakout have run this range breakout for the total width of the range, okay? And then sometimes we do get a second chance, okay, meaning a pullback back to retest the breakout levels, okay, in this case the range bottom. All right. This is important, guys, because it means that you will effectively have a second chance on a trade that you initially missed it, okay? You didn't have a go at the first move, okay, at the first breakout, but that does not mean you cannot trade the pullback if the pullback indeed happens, okay? Sometimes it does. Like I say, many people close out their positions once the total width of the range has run, okay? Positions are being closed. Price therefore retraces back to breakout levels. Many traders, just as yourself, people who missed out on the first move, see a second chance to rejoin short in this downtrend, okay? And therefore they enter short there, and well, they have a second chance indeed, you see. So as I'm saying, please don't just close a chart, sorry, if you miss the initial breakout, because you may indeed have a second chance up on the pullback. Sometimes the pullback don't happen, okay? As I was showing you before in the previous chart, once the breakout took place, the breakout pullback continuation took place, wow, it just moved right through and you never have a second chance. But sometimes it does happen, okay? So like I say, if you miss the first move, you know, it's worth to keep an eye on this chart for a little bit longer, because few bars later, like I say, you may have a second chance. Like I was saying, price retraces back, more people and more traders, just as yourself, see a second chance to profit from this downtrend, and they enter short and therefore push price, you know, for a whole new move, okay, to the downside, in the direction as usual of the main trend, okay. In that case, what I personally do, if I miss the first trade, okay, if I miss the first impulse, let's say, the first swing, I like to place a sound alarm a few pips, perhaps 10 pips below the former channel bottom. So if price is to eventually retrace back, I will be warned. Okay, my alarm sound will ring off, and I will know that there is a second chance. If of course, if price retraces back into the consolidation area, or simply shoots rockets up straight through, well, you know, there is no trade to take. But if these former levels of support eventually up on the pullback become resistance once again, there are high probabilities that the move will continue in the direction of the original breakout, okay, and you will indeed have a second chance to enter short in this downtrend. These opportunities of riding the second swing, if in case you miss the first one, actually are valid for both for range breakouts and also for triangles, actually, especially flat bottom or flat top triangles, okay. At the end of the day, remember that the range is basically a triangle, whereas, well, you know, the outer boundaries of that consolidation area simply shape in a different way. But at the end of the day, the psychological reasons to for triangles or ranges to form in a downtrend are basically the same, okay. For this reason, as I'm going to show you another chart. In this case is the Canadian dollar against the JPY. As you can see, this is a flat bottom triangle, all right. We have a clear level working as support, and then we have a leaning trend line effectively making lower highs, building up pressure up on this level, and once it gives way, if you miss this first swing, this first impulse, don't you worry, because you may have a second chance, okay. As usual, once price has run the largest width of the range, of the triangle in this case, once it's run to the downside, some people, conservative traders, might close down some of their positions. Price retraces back, just as we saw before in the range example, really, retraces back to the main reference levels, which is of course the range bottom, form a support, now perhaps working as resistance. If price drives through, you know, nothing to do here, you cancel, you can definitely now forget about this setup. But if price doesn't drive through, and indeed you see that this level works as support, okay, sorry, as resistance, form a support, now resistance, and begins to turn around, it's a nice chance that you may see a new swing to the downside, okay, in the direction always of the main trend. So both in triangles or in ranges, if you miss the first move, keep an eye on the breakout level, okay? In this case, the triangle top, or in the previous one, the range, the triangle bottom, not the triangle top, the triangle bottom, or in this, on the case of the range, the range bottom, okay? Because you may see a retrace upon running the total width of the pattern. You may see a retracement back to former support levels, then working as resistance. If they do work as resistance and you see price standing around, you may have a nice chance to, enter short right there, somewhere around there, and write it down for a new profit, okay? Alright guys, that's basically all for this video. I hope the way I explained the way I personally trade ranges in a clear way. Most important of all of this video is to remember that there are different type of ranges. There are different type of ranges. One of them, some of them are small, okay, made by like as I was saying, about 20 bars. In those cases, you want to zoom into the shorter time frames in order to search for that pullback signified by a red bar, or red bar in this case, since we are in an uptrend. In a downtrend, of course, we would be looking for 1, 2, or 3 green bars up on the breakout, okay? So in small ranges, it's good to zoom into the short time frames. In large ranges, usually there is no need. You can see the breakout pullback thrust in the setup chart in itself. Also, another concept we've talked about in this video is that the longer the range is, the longer the move up on the breakout will be, so you will be able to expect larger profits, since most of the people waiting for this breakout to happen, is some sort of a market euphoria. Once the breakout happens, everyone's get excited, everyone gets their positions ready, and upon confirmation, they enter the market, and price, bang, moves very quickly in one direction. And finally, the third important concept we've talked about in this video is the fact that if you miss the first move, okay, the first swing up on the breakout, if you got no breakout pullback continuation pattern at all, and price simply drove through, don't worry. There are chances that sometimes, once the total width of the range have run, you may see a retracement back to former support levels, now working as resistance. And if it does indeed work as resistance and price retraces from there, okay, begins to curl around, there are good chances to enter short in order to make some new profits, okay? Alright guys, that's all for this video. Now I'm gonna show you in another video a live example of a range breakout. I hope you liked this video. If you have any question whatsoever about ranges or range breakouts, please don't hesitate to drop me an email. I'll very gladly answer all your questions. Okay. All right, folks. That's all. Bye bye.